Ever wonder what the stock market actually is? Why companies go public? And what's in it for you, beyond all the jargon and chaos? Well, what if I told you that understanding just this one concept could completely shift how you grow wealth, even if you've never invested a dollar before? Let's make this simple. This is Capital Craft. And today, we're going to break down the stock market in a way that makes sense, feels real, and gives you something you can actually use. Forget Wall Street movies. At its core, the stock market is just a place where people buy and sell slices of businesses, called shares. Think of it like a giant pie. Every share is a tiny bite of that pie. You can own a piece of Apple, Tesla, even Coca-Cola, and when that company grows, so can your bite. Let's say you're running a successful business. Things are booming. But to expand faster, you need serious cash. You have three options. Option 1, take a big loan. Risky. Option 2, find rich investors. Complicated. Option 3, sell a piece of your company to the public. That's what going public means. They get ownership. You get cash to grow without paying interest. Say your company's worth $100 billion. You decide to sell 25% to the public. You slice that into 25 million shares at $1,000 each. Investors buy those shares. You now have $25 billion to scale your business, and they now own part of something big. Now here's the flip side. Why should you care? Because when you buy into companies through the stock market, you're not just gambling. You're partnering with real businesses. Think of this. Amazon's early investors weren't billionaires. They were regular people who believed in a weird online bookstore. And today, they're set. But here's the catch, and it's where most people mess up. Stocks can crash. Markets do drop. So how do you avoid losing your shirt? Stick with me. Let's go back to your imaginary $100 billion company. If things go south, sales drop, bad press hits, or the economy crashes, your company could be worth half that. Now that $1,000 share is only worth $500. This happens, it's not fiction. That's the trade-off. High growth potential versus short-term volatility. The best investors? They don't chase trends. They buy into solid companies. They hold for the long run. Like planting a tree, you water it, ignore the weather swings, and let it grow. Want stats? Historically, the market returns around 7 to 10% a year over the long term. That beats inflation, beats savings accounts, and beats doing nothing. Going public isn't just about raising cash. It also adds prestige, helps employees cash in on their stock, and lets you participate in the company's growth. Everyone wins if the business wins. Thanks to fractional shares, you can now invest $10 and still own part of Apple or Microsoft. There's no excuse. The door is open, but walking through it? That's on you. Let's recap. The stock market is a marketplace of ownership. Companies go public to raise fast capital. Investors gain a chance to grow wealth with those companies. Risk is real, but long-term thinking wins. And today you can get started with less money than a pizza night. If this helped you finally get what the stock market is about, hit that subscribe button. We're here to make finance make sense. No fluff, no fear. Drop a comment. What's one investing question you've always been afraid to ask? Let's build wealth the smart way, together. This is Capital Craft. And your financial upgrade? It starts here.
Brought to you by Capital Craft, mastering wealth, one step at a time. Till next time.